Hey traders, Todd Gordon of tradinganalysis.com. This is the free video for Wednesday, September 3rd, and I just want to update you on the Russell position that we spoke about back here on August 8th. We walked you through this trade setup. I'll let the video play for just a few seconds, and then I'll bring it back and update you exactly where we are in this trade.
Elliott Wave and Fib. So we have high implied volatility. Russell's at support. A good way to do it was we calculated the one standard deviation level for September options. Why? Because we think this market's going to consolidate through the end of September, so we want to be short premium in this higher implied volatility area during that duration of the trade. So going over to the Dow platform, we have IWM. Right here it's at the 51 IWM.
Stop talking, Todd. So what we've done is we identified high implied volatility in during this pullback in the Russell. We sold downside puts in anticipation of the C wave low. Let me go back, looking for a D wave rally. So here's the updated chart, and we have moved nicely higher from the C wave low into D wave resistance. Okay, what we wound up doing was we sold a little bit higher puts. We sold 107s. Okay, so we sold 107s. We're up about 1,400 bucks in the trade. I did wind up making it a spread later on, doing the 107, 102 short put vertical. So for 1,000 shares, we wound up making 600 bucks or so. So not bad. This trade was done in other accounts with short options only, but this is a smaller size account, only about 50,000. So I made it a spread to free up some margin for other positions. So what are we going to do now? Well, we have bids in to buy the short option back. The short 107 puts for 5 cents, which on toss is commission free, and then we'll just let those 102 puts expire. Most likely worthless. If the Russell wants to get down to 102, that's fine. So we'll just leave that as is. Now, here is the updated position. We are now in the D wave of resistance. We have a couple different fib levels at work here. We have the 1272 external retracement of this final C wave here in green. We have the 786 retracement of this orange C wave decline here at 1190. And we also have the 618 D versus B relationship, which is very common in a triangle. What this is doing is measuring distance traveled in ongoing D wave compared to the prior B wave, and your 618 is 1188. So altogether, we have 1179 to 1190 massive FRZ, Fibonacci resistance zone, likely a D wave that should give us an E wave sell off into the end of September to complete a larger degree fourth wave triangle, so sideways consolidation before we do move higher. So we're going to be looking to be short the Russell into this fib resistance zone tomorrow with clients. We'll likely do this by selling some premium above, selling 1200 equivalent in the IWM. We can also look to get a little directional and buy some vertical put spreads down there for the move down in the E wave. But several different option premium strategies we'll use to get short Russell against this expected resistance. Stops would be above the wave count validation, which anything above this B wave high invalidates the count, so that becomes your stop loss. All right, guys, good luck. Hope that helps, and we'll see you on the next episode.